The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex.
Let's go to Scott in Colorado Springs. Hey, Scott, what's going on?
Good morning, guys. How are you?
We're doing great, man.
I want to thank you for bringing this Nadex platform to our attention.
Oh, cool.
It's one of the most powerful things that I've seen.
Yeah, it is certainly a platform that not only is neat, but what's so sweet about it, folks, if you haven't tried it out yet, is that when you put your trade on, that is your stop. So what happens is this. Everyone's excuses all the time is that I moved my stop, I didn't put my stop. Well, that is your stop.
Yeah, exactly. I mean, it's perfect. You can set your trades and go do something else.
Now, Tom O'Brien and Steve Rhodes.
Welcome, folks, to the Nadex Bull Bear Binary Option Hour, where you can set it and forget it. Let's go take a look at these markets. You've got the Dow off 65 points right now, S&P down 7, Composite off 16, small caps Russell 2000 down 5, New York Stock Exchange off 0.5% as well, down 42 points. The NDX leading the charge on the way down, mostly or all because of Apple out there, off 17 points right now. 877-927-6648. That's our phone number. In fact, the chart that I've got up on the screen, if you are watching us on Tiger TV, is a combination of Microsoft and Apple. It's a weekly chart out here. If you're just listening in on the radio, maybe it's your mobile device, you're using tfnn.mobi, you can always come catch an archive of this show on Channel 10 out here. So the candles that I have out here is actually Microsoft. And what I've done is I've backed Microsoft up to the time period where it made its highs. Made its high on November 2nd, 1999. I got to go back even further. I got to back this thing up further. Give me a moment here to work on this chart here. I wasn't paying attention to my homework, so let me back this up even more. Give me a moment to pull up this indicator. What we're going to do is we're going to overlay Apple over Microsoft when Microsoft was making its highs, which was all the way back in December of 1999. So let me see. Maybe if I put minus 654, I'm just going to guess here, see where that gets me to, and then I'll pull it back. Okay, I'm pretty close out here. There we go. I got to pull it back just a bit. So we'll do this. I'm going to do this live. You can watch me as I do this on the screen. So I'm going to show you a chart pattern. It's one that you certainly want to be paying attention to, in my opinion. Chart patterns, sometimes history repeats itself. And so now we're going to take a look at the history of Microsoft versus that of what it is that we're seeing here with Apple right now. So let me overlay it. There we go. I think that's about as good and as exact as you can get. So now what we're taking a look at is we're taking a look at Microsoft coming off of, watch it coming off of its lows, let's say, back from the 1992 time frame. So now the black line that you're looking at on the screen here is actually a chart of Apple. So here you've got Microsoft, and especially when you start getting into the time frame of 1996 on Microsoft, the chart really starts maintaining a very, very similar pattern. Again, we're taking a look at a weekly chart. When it's making highs, when it's pulling back and making lows. I mean, how is it, folks, that works? Look at the low, the retracement down here, back in the March 1999 time frame. Happens to be lining up with the March 2009 time frame inside our markets. Take a look at Microsoft. Microsoft made its peak during the dot-com era, if you will, on December 31st, 1999. The high on Microsoft was $59.97 out there. So all I've done is just simply overlaid the chart of Apple on top of it. Now, if we take a look at Microsoft, you can see it made a low. Take a look, coming off of its highs. It made a low, in essence, coming into, if you just want to maintain the exact same number of weeks, it basically made a low next week. If we're, in Apple's terms, if you will. And then it had one heck of a bounce. If we measure that bounce here, we'll go from the low to the high. On the weekly chart, it was a bounce that lasted about a month's time frame. So from December 1999, we'll go down to the low that was put in on March, March of 2000. I'm just using not so much the time frame as I am just taking the ascent down here. But what you can see is what it did was it did a 0.786 retracement. Now, we know that Apple at some point in time here, there's going to be some buyers swoop in and they're going to think it's a good deal. And so you're going to see, or it's going to get simply some support from the institutions that are out there because it is so widely held from an institutional standpoint. And what that says here, if Apple maintains the same type of relationship just simply to the markets for whatever reason, the same chart pattern, and we're seeing very similar chart patterns here when we take a look at Microsoft. And what Apple ought to get at least one bounce out of here. But this suggests that if this maintains the same patterns, that Apple saw its highs back in that $700 range out there. And if we take a look, and I just simply move the chart forward here with regard to Microsoft, you can see those highs out here. Let me just shrink the chart down. It'll be easier just to kind of try to combine everything out here. Well off of the highs out there at $50 and change, trading out at $26.47 out there. So kind of, I think it's an interesting chart, especially to watch the similarities. There's others that you can do out there as well, but just thought I would share that with you. In fact, I'm going to go ahead and save this so that we just continue to peek in and look at this from time to time. So we'll save this thing as Apple, Microsoft. There we go. So we'll always be able to look at it. All right. Let's go continue. Let's go take a look at the markets out here. Or you can give me a call at 877-927-6648. Let's go take a look at the volume behind the market. Let's go into the ETF structure here. Let's go into the 10-minute chart, and let's see what it is that we're looking at. Let's start off with the SPYs. That was in the upper left-hand corner. Let me refresh my chart here. We can see some pretty decent volume to the downside here over the last couple of 10-minute bars. Well, let's let this thing here. There we go. All right. So actually not that bad. So we had volume coming out at 1010. There was 9.5 million shares. That's after making a upside spike at about 350 yesterday with 20 million shares out there. As far as patterns, we're just taking a look at the ETFs just to try to understand some volume in the marketplace. As far as the last 10-minute bar out there, 9.5 million shares. You've got 7 minutes in this session, so about 2.3. So volume falling off just a bit. That was in the SPYs. The SPYs yesterday did test a swing point from August 2nd, rejected that swing point on volume and price. Let's go take a look at the diamonds out here. We'll refresh our screen this way. We know that things have been in just simply a descent. So on the 10-minute chart, it's not going to be any way for me to go back and try to measure swing points, tests of swing points. Just really looking at the volume pattern here this morning. So the market opens up 267,000 shares to the downside. The last 10-minute bar, 228,000 shares. That's after coming into the close yesterday from about the 340 time frame where you had increasing volume. Now you've got decreasing volume on the downside out here. Of course, we know that often happens late in the trading session out there. But volume here so far, not anything substantial that we're seeing in the diamonds. Let's go take a look at the Qs. The Qs surely being pushed down by Apple, let's see, you got Google trading off $8 as well, so that's not helping things out. Let's refresh my screen here and take a look at the volume to the downside on the 10-minute charts here. So we can see you had a little bit of a down thrust here at 1010 as we were just coming into the open of the show. 2.7 million shares to the downside. This bar here is going to be much weaker thrust, only 670,000 shares, so it looks like about a million or so versus about half of the volume to the downside. Let's go finish this off by taking a look at the 10-minute bars, and then we'll take a look at the dailies here on the small caps, or on each of them, but let's go take a look at the small caps. Let's go ahead and refresh my screen and see what kind of volume it is that we've got coming out of the tank here. So just like the Qs, the last 10-minute bar at 1010 had the volume in it, 3.2 million shares out there. It's fallen off here in this session right now, so something certainly was spooking the market to the downside at that 10 to 1010 time frame. They must have known that we were just getting ready to kick off the Nadex bull-bear binary option hour. Now let's go take a look at the daily charts out here and see what it is that we have. You've got the Qs up first. The Qs trading out at 61.70, really coming against their last bastion of support out here. Let me just delete everything off of the screen. We can always put stuff in here. Let's take a look at what's relevant. What's relevant is you had a gap up here. We'll put the line across on the Qs. That is the trading session of June the 6th out there. That's what it's trading into. That low, 61.52. If we take a look at where it's traded to so far this morning, 61.55, has done 12 million shares as you're coming into the area where it gapped up, which had 58 million shares. So it's got the volume for sure if you just do the straight line math on that. straight line math will take it to about 75 million shares or so, going against 58 million shares. So that is an area that has been tested before. So this is going to be the third test out here, which is very important, because when you can't break a gap and you get a third test out there, the first test, by the way, was June 28th out there with 49 million shares coming to the downside, and then you had another gap up on June 29th. So it's coming into an area. If it does not hold here, it will finally go down and test the June 4th level. But I suspect if it really does get down there, it'll bust through June 4th out there. That only it does have a good volume. It does have 74 million shares down there. But I don't think that those lows will hold the way that this market has been trading. So the Qs, very important to watch the Qs today, because they are up against an area that was tested before as support, being tested again here this morning and today. So we'll certainly be paying attention to that during the day, and certainly during the 4 to 6 Tom O'Brien show. Let's go take a look and see what the other ETFs are doing out there. Let's go take a look at the SPYs. SPYs right now trading out at 135.31. They had made a 1 to 2 A to B equals CD. Let's just erase everything on the screen, because we can always draw these patterns back in. What the SPYs did yesterday, they were testing the August 2nd level. August 2nd low was 135.58. So let's pull that across. That volume, we'll go ahead and draw the bar on the screen. If you are watching us on Tiger TV, you'll be able to see that. And again, you can always catch an archive of this show on Channel 9. So you can see yesterday you had a test of that area. 177 million shares was moving into the 199 million shares standpoint. So not enough to bust it down. That area being tested again today. So if we just take a look at straight line math, volume of 44 million shares today. 44 million times 6, well, that's 240 right there off the bat, coming into 199 million. So it'll have the volume today if it can hold up here. Also, it's going against a swing point. Well, it's also going against the volume. Really, if you take a look at it from July 27th, that's 236 million shares out there. So if we take a look at it, also you got this little gap that it has not tested, which would be the July 25th high, which is 134.56 out there. Let's go take a look at the remaining two ETFs. Let's look at the Dow Diamonds. You've got the Dow now down only 24 points out here. We'll go take a look at the currency market, a few other things. Anything that you want, quite frankly, if you just give me a call, we can always switch over. So we take a look at the Diamonds. It's running into this little cluster pattern here of that has held as support. It has not made its way all the way down here. I would say that level would be right at about the, let's use the high of June 6th out here. We'll draw the line across the screen. That level has not been hit, but it's got this little cluster here that's acted as support. You'd have to just really move this line up to probably about right in this range, right in here. And that's the area that is held. Volume so far in the Diamonds, 1 million shares. That sets up a good 6 million share day after doing 7.5 million shares yesterday. 877-927-6648. Dow's off 30 points. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Back, folks, 877-927-6648. Dow's up 25 points right now. I had a question from someone in the den. Just simply, there's been a lot of articles out there and some discussion here about the crash of 1987 out there. So what I do have up on my screen here for you that are following along, I went back to the New York Stock Exchange chart back in 1987. Now, during a 1 week period of time in 1987, there were six planetary conjunctions that all took place. So that's the alignment. Conjunction is when you're basically at 0 degrees. So everything was lined up, right after each other. The conjunctions were Mercury and Venus. You had a Sun-Mercury. You had a Mercury-Mars, Sun-Venus, Venus-Mars, Sun-Mars. Now, having that many alignments show up in 1987 out there, that it doesn't, and during a 1 week period of time, doesn't happen very often. And the question is, is it the lunar cycle that maybe leads to the crash? Is it the planetary alignments that maybe might lead to a crash or make you, should you be cautious of? I can't, tell you the answer to that. What I can tell you is that the moons typically, what they do, folks, is they act as more of the fuse, not so much the event that propels things. Right now we came into a new moon solar eclipse combination a couple days ago. Those lows basically, now there was not a close below yesterday. There's a 2-day orb maybe on either side of them. Looks to me like really the lunar cycles that have been working so well spot on since June just simply aren't working. There's a period of time where they just simply won't work. That's a powerful piece of information as well, because you can remove that as a indicator. You wait for them to start coming back in line, and when they're working, and you simply use them. So it's just like any other indicator that you might use out there. They don't always work 100% of the time, whether any indicator, at least no indicator that I'm aware of out there. Now, we've taken a look at that set of conjunctions. You might say, hey, Steve, when was the next set of conjunctions, that might have been like that? That's a great question. Well, you can go back into the February time frame. February of 2011, so let's go ahead and move that forward here. We'll go take a look at February of 2011. We'll move that forward. And in February of 2011, we actually had more conjunctions take place within a 8-day period of time. Because on February 17th, you had the Sun conjunct Neptune, but during the 19th through the 25th out there, you had, so really 17th through the 25th, let me count them. I don't think I have, maybe I do have them all up there. You have 1, 2, 3, 4, 5, 6, 7, 8, even more conjunctions out there. That is the February time frame. And if we take February of 2011, did that lead to a crash? No, not at all. And in fact, what it did do in that February time frame, as we take a look, I'm going to have to move this over here to February just so you see it. So here is the February time frame. Darn it, don't do that. There we go. There we go. So here's the February time frame. We're taking a look at the New York Stock Exchange. What we can take a look at is those highs were even taken out. Now, the high there in February 28, 2011 was 8520.27. So the highs were taken out the month of April. Well, just so happens that the month of April 2011 had 5 planetary conjunctions that all lined up with each other. Did that start a crash? No, but did it put in the high in the marketplace? Hey, it absolutely did in the New York Stock Exchange. That's April 30th, 2011. That high was 8678.10. We haven't even gotten close to, well, you got close to that area when the high came in September just recently here out at 85.15. But that high has not been taken out. I think it acts really more, folks, as a level of resistance out here when we take a look at those planetary alignments. In 2012, just to round things out here on this discussion for you, we had, I think I might even have this marked on the chart here. I don't for some reason. So in 2012, let me give them to you. It happened to occur during the week of February 2012. Let's come take a look at when that was. That was right here. That was, what I say here, the high out in February 29, 2012, for the month of February, 82.10.26 out there. That was only 4 planetary conjunctions. I don't believe that we see another set of planetary conjunctions like that for a while out here. I have to go back and take a look at 2013, but what I can tell you is there is no more alignment set like that in 2000 and for the rest of 2012 out here. So to me, that's the pattern behavior. Whether new moons or full moons lead to crash cycles. No, they're really just triggers out there. So I think anybody that's done work on that or writes articles really didn't go back, in my opinion, and take a look at the more powerful planetary alignments that are out there. 877-927-6648. I'm no astrologer, though. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow off 25 points right now. S&P's off 3. Composite down 8. Small caps off 2. We've got the Euro-US dollar currency pair chart on the screen here right now. We're taking a look at the 30-minute chart. So one of the things that certainly pushed the markets down was that 30-minute bar between 10 and 10:30. You can see it's a wide range of bar. Let me explode this out for you. Here you can see something really, somebody didn't want to go home with euros over the weekend, or something happened somewhere for sure to spook that. Got a wide-ranging bar as it was trying to, as it was completing A to B equals CD down. It actually had completed the 1 to 1.272 level out here. You got some bullish signs, only did a very, very small bounce, and then boom, the air came out of it. Now at that wide-ranging bar, that does suggest, even though it came down right to the 0.786 level, I mean right to, it looks like almost right to the tick. That level, I can't really read it that well. What I can tell you is that the euro got down to 1.26893. It looks like it was probably 1.26895 was the actual projection amount out there. It does suggest the very likely possibility of a larger move down, but it was that 0.786 level that so far has held it in place. But that was from a currency standpoint. Also, you can see now it's gotten into that little oversold territory where it needs to just simply bounce. That's what it did last time as it was completing that 1 to 1.272 A to B equals CD. Well, you can see there all it did was it just simply bounced sideways. If you take a look at the retracement that it actually did here, off of the A to D point. It did a 0.382 retracement. I'll make that black color so you can see what happened there. There we go. As you can see, there's so many lines. Let me just get rid of them for you. Let's take a look at the actual retracement this way. So that's why you want to be able to use your Fibonacci retracement expansion numbers out here, because prices will just simply boing in between them. I know boing's not really a great word out there, but it certainly should be a word. So take a look at coming from the high at 10:30. This is at the high at 10:30 in the morning yesterday, November the 15th, all the way down to the low swing point at 5:30 this morning. And so you can see getting down into this oversold territory, a little bullish engulfing after the doji as it was making that low out there. And then it does its normal retracement, its normal first retracement, which is at the 0.382 level. Looks like it also probably hit that really to the tick, which is pretty amazing, to the pip, I should say. The actual number it got to was off by 4 little pips. 1.27521 is what it got to, and 1.27525. Pretty amazing stuff out there, folks. You should really make sure that you keep these as part of your trading system out there for sure. Let's go take a look at back at the Japanese yen. That has been weakening very strongly against the U.S. dollar. And so let's go see what the Japanese yen is doing here this morning. Japanese yen trying to move higher. Of course, it's these two wide-ranging bars. What I was showing during the first hour of the Trader's Edge show was showing the number of different expansions and contractions of swing points. Actually, so let me just show them to you now, where the yen stopped in its place. But as I said, even though it was setting up a Gartley sell, a butterfly sell pattern, I said you do not take that trade because you had wide-ranging bars coming into that area on a daily chart, and you just simply don't do that. But it did say, hey, here's an area where it wants to pause, maybe work sideways. So you can see here the 1.618 expansion of swing point. So that's really off of the swing point of August the 20th all the way down to the low on September 13th at 77.21. It's that swing point, that set of swing points that you're using. You're taking from the top to the bottom, subtracting the difference, multiplying that times 1 point, in this case here, 1.618, adding that to the bottom. That's how you get that expansion up there. So that's one. We can take a look at the next set of swing points here. Here's a 1.272 expansion. Now we're going to use the high of June 25th down to the low of September 13th. So we're using the exact same low out there. I'll always be using that as the anchor point for the low. Where does that get to? The 1.272 area. Now, if we just simply come straight across here, here's a 100% move of a move, which we know when you do that, oftentimes you just simply rest. So now you've got a third. Now we've got the fourth set out here, which was the 618 retracement. That's going from the swing point high, which was at March 15th, 2012, out at the 84.17 level, all the way down again to that same swing point on September 13th. You can see that was the 618 level. So you got a number of expansions and contractions converging all in one place. It tells you that if you are long, it's an area where you would start to be very cautious, or your expectation should now switch to a level of, hey, this could actually pull back. This could actually move sideways. You'd go ahead and dig down a little bit further on an intraday chart. Maybe you'd go just simply and take a look at the 10-minute chart. So let's go take a look at the 10-minute chart out here. And we've got to refresh our screen, just make sure we've got all the data and see what patterns are being formed. So was there an A to B equals CD down as it made its high? Well, let's go take a look. We use the 8:50 a.m. time frame from yesterday as it made the high, coming to that 81.45 level. So that is going to be our A point. Our B point down here is going to be the low that came in at 12:40 in the afternoon yesterday. That was down at 81.04. Your C point would be right up here as this thing had moved up into the level at 7:30 last night, out at 81.25. Was an A to B equals CD, hasn't completed it all the way. It got very close at about the 1:40 time frame this morning as it got down to 80.85. Right now, it's just simply doing nothing more than just traveling sideways. If we take a look at any A to B equals CD up patterns out here, it could be making one right now. That would look like this, in my opinion. That would be coming off of the swing. This, again, we're looking at a 10-minute chart out here. So ultra short-term intraday. We're looking at the 3:40 a.m. time frame. Low and you would come down here. So it could be making A to B equals CD. That would do what? Take it right back up to the swing point high on at 8:50 a.m., which was 81.45 on the 15th yesterday. Of course, as the yen moves up on this chart, the dollar is getting stronger. The yen getting weaker, the dollar getting stronger out there. Let's go take a look at, let's go take a peek in on Apple, see what Apple is doing out here. Now down about $7 and change. Was down much more than that earlier. So let's go take a look at Apple and see what is going on volume-wise as well as chart pattern-wise. Come on, where are you? It should be in the upper left. Here we go. So we've got the Apple weekly chart out here. Let's go take a look at the daily chart. And what you're looking for, Apple. If Apple rejects the swing point here of May 18th, that low, 528.66, has a chance to form a little bounce out here. It's going to come into that swing point with volume, but nonetheless, if it does hold, it'll be back down there, but it does provide an opportunity for it to bounce. Let's go take a look at the daily chart out here. The weekly chart certainly looks miserable. The daily chart doesn't look much better either. Let's get rid of this A to B equals CD down just simply. And what you can see here, down below the swing point, now trading into the swing point right here, which goes back to March 6, 2012. That has 28 million shares there. The low, 516.22. Excuse me. Got down to a low of 515.50. So it's trading up above that. So that's really the swing point. Now that it is tackling on the daily chart, let's get rid of the weekly out here. The lines. Let's draw this across. We'll take a look at volume and do a little inspection here. There we go. So we know that it hit that swing point. We'll draw the volume bar across here. And yesterday, I believe it did about 26 million shares. So yesterday did 26 million shares. Get rid of that. Today, so far, been trading for an hour and 15 minutes, and Apple has volume of 11 million shares. So, man, it's coming in there with volume for sure. Nobody wants to buy Apple. Let's go take a look at the intraday chart on this, see what it is that we can find here on the 10-minute chart. Let's see what kind of volume patterns we've got going on out here. Come on. Come on, baby. Just there we go. So as Apple was moving down here, so you can see volume is waning. So the sellers right now taking a break in Apple. The sellers we're taking a look at from the 10:10 a.m. time frame down to the present time frame. Not moving up, certainly, but the selling right now has kind of eased in Apple. Let's go take a look at some of the sectors within inside the S&P 500. Let's go see what the sectors are doing. We've got the XLE up on the screen first here. The XLE yesterday and today testing August 2nd. The August 2nd swing point low, $68.16. It's trading out right now at $68.35. As the, let me make sure I've got this on the right candle there. There we go. So as price came in there yesterday, you got to read now. Yesterday, let's see here. Yesterday the low was 68.19. So 68.19 going against 68.16. So it didn't test it yesterday. Was coming in with a little bit lighter volume. You do have the test today. So a rejection today would be a close back above August 2nd with less than 15 million shares. That price point, again, 68.16. So far, in an hour and a half, hour and 15 minutes of trading, though, 4.6 million shares. So it's got some volume. Volume would really have to come out of this thing here. It is options expiration Friday. Anything can happen today out here in the marketplace. So right now you've got a little bit of a rejection of that swing point after forming an A to B equals CD. That was a 1 to 1.272. But what we have here is we've got price really grooving and moving on the inside of that C to D leg. Let's go take a look at the financial sector, see how the financial sector is holding up here. That would be the XLF. The XLF right now trading out at 15.15, having really a sideways day. It did, yesterday as well. Yesterday forms a bullish harami. So there is a little bullish sign out there. It's really just a pause in price on the way down. Says that when you're short here, it just says be cautious because selling had slowed down. Doesn't tell you to exit. It's certainly not an area to use as support out there. We can see that the XLF really holding up pretty well as far compared to the general marketplace, just simply by using the measurement of going back to the June 4th level. June 4th or June 5th here was really the low, I think. Let's see, 1330. June 4th was the low, $13.30. If you go from that June 4th low up to the high, put in the XLF on September 14th, you'll see that you're really just trading right around the 0.382 retracement, 1524. So what does that say? If you were to get a market bounce, where is it that you would maybe look for a trade? Something to think about, because the XLF has held up pretty good. If we go take a look at the XLE, just do the comparison of the XLE out here. Let's go see how this has held up in comparison to the June 4th swing point, because I actually don't know the answer. That's why I want to go look at it. So we're going to go take a look at it, see how the XLE is held up. We're going to go from the low of June 4th up to the high. And let's see if I can get rid of some lines that we can just draw back in. It makes it a little bit easier to look at the chart for you, I'm sure. Let's get rid of this tool as well. Okay, so what we can see is that the XLE is weaker, right, than the XLF out there. It has done a retracement close to the 0.618 area. That would have been 67.31. The XLE has gotten down to a price point of 67.98. So almost a 0.618 retracement versus the XLF out there. Kind of interesting. I'm not suggesting that you play a bounce. I'm saying, though, if you ever were considering it, what you'd want to do is go take a look at the sectors, and you'd want to take a look at the equities within those sectors as well. Well, when you play a bounce of the XLK right now coming into the island reversal. So the island reversal that was set up on this sector inside the S&P 500 was the cluster of candles from the June 1st, June 4th, and June 5th level. That gap here now being tested from June the 5th. That high is 27.56, 7 million shares. As the XLK was moving down yesterday, was coming in with 9 million shares, so certainly coming in with volume. Now all that you're doing is you're testing the swing point. You've tested the swing point low on this of June 4th. That has 7.8 million shares. So far today in trading, 2.8 million shares. So it's got the volume as it comes back into that area. That says that your better trade set up on the XLK, quite frankly, is a test of the low of June 4th, which would be 27.04. Of course, you'd like to see any test on lighter volume. You come into it with higher volume, what are you going to do? You're going to then move down to the next area. The next area on the XLK would get you back to January of 2012, get you back to the beginning of the year pretty quickly out there. Let's go take a look. So we've gotten through the three primary sectors out there from a weighting structure. Let's go take a look at the materials sector. I believe that's the XLB. If it's not the XLB and you're in the den, maybe you can correct me out there. But I think the XLB is the materials sector with inside the S&P 500. Let's go see what this has done as far as retracement going back to June 4th. Let's use the same level out here. There we go. There's a June 4th low. So as you take a look at the materials sector, the June 4th low all the way up to the high put in on September the 14th, you can see that is below the 0.618 level. That looks like it wants to head down to $33.87. 877-927-6648. Big winners in the marketplace today. You've got Penn National Gaming up 30% here because they are going to go ahead and split off their real estate assets from the rest of the firm, so up 30%, up $11 and change. Shift Nutrition, SHF, having a nice day out here, up $9 and change. That's up 28% out there. You've got Regeneron Pharmaceuticals up $9 and change. Apple, the leader to the downside, down $10 right now. Sears Holdings just behind them, down $9 and change. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour. As we come into it, you've got the Dow down about 20 points right now. S&P's off 3. Composite down 6. King Dollar, though, up 29 ticks right now. Gold only back $1.90, down at about the 17.11 area. You do have silver off 42 cents right now, off 1.3%. Light sweet crude up a buck out there. Over in Germany, the DAX is off 50 points, the FTSE down 54 points. Let's go take a look at Freeport McMoran. FCX is the ticker symbol. Moving down into the area where it last broke out. That happens to be the day of September the 6th out there. 16 million shares on that trading session, 39 million shares the day that it broke out on September the 7th out here. It is the top of that candle, September 6th, is 36.73. So the workers are out there trying to repair that window. If you get a close below 36.73, that window will be closed. That will no longer be an area of support out there. So today is the first test of that. That means it needs to close above 36.73 in order for that to be a valid support area. It's trading at 36.70 right now. You'd also like to see the volume be less than 16 million, but really it's going against that breakout of 39.50. Volume so far today, though, almost 5 million shares in an hour and a half of trading. So it's got some volume. A lot of that volume came right at the open, so you might want to peek back in on Freeport-McMoran and see how that does in holding that support area and coming back to an area where it most recently broke out. Let's go take a look at a couple of these other equities here that are moving. Regeneron Pharmaceuticals, that's up 7% here this morning. Ticker symbol REGN. REGN, I don't know if they were out with numbers or what is behind the move here. Let's see. Doesn't say. They received chimp positive opinion in the European Union for previously tested metastatic colorectal cancer treatment. Okay, so that is what is moving this equity here up about 7%, as I say, up about $11. If we take a look at this equity here, so it's getting back above an area where it had gapped up. Had done that on the 26th of April out there. So back up at that, and what it's going to do here is going to go try to take on the swing point high, it looks like to me, which would be the week of, or the day of October 17th, only 1 million shares up there. It's done, it's done 500,000 shares here today, so it should have the volume on the way up there. What else do we have here that is moving? Schiff Nutrition up 28%. Let's see, what is behind that move here? Oh, an all-cash tender offer. We don't need to go take a look at that. So that is what is driving that equity. Intuitive Surgical. Let's go take a look at Intuitive Surgical, ISRG. That is up a few bucks here this morning, up $8. That's up about 1.5%. So let's go take, this is not a, so Intuitive Surgical trying to get back. So this really is in a consolidation. I say that, folks, just simply because of the gap down that this thing had going back on July 20th. We can see that really, if we take a look at the resistance area, it's going to be the top of the candle where it gapped down, which was July 20th. That price point, 518. You had a couple nice signs of strength in here on the 16th and on the 18th of October out there. So it looks like this is going to go back and try to retest the high. It's going to go back and try to, when I say the high, the resistance area, which is in the 555, 58 level. Folks, it's been a great 2 hours. If you've been with me for 2 hours, thanks so much for sticking around. Stay tuned. Basil Chapman is coming up next. And then from 12 to 1, it's Nico DeHaan. Daryl Martin, I presume, will be taping some other show there from 1 to 2. 2 to 3 will be David White. 3 to 4, Ken Shreve. 4 to 5, David White and myself. And then from 5 to 6 will be Ken Shreve tonight. Take care, folks. Have a great day.